Bitcoin and ETH futures and Perps market that's somewhere in the $50 billion of ADV versus options being $1.5 billion. When you look at the way the unregulated market is set up, which was single entity models doing everything, so doing the KYC, the AML, the price discovery, the clearing, the settlement, offering the leverage, that's too much counterparty risk for large institutions to take and too many conflicts of interest. If this market is going to institutionalize, you need to solve for the banks. And to solve for the banks, you have to set up a true exchange model.
When can you go live with your UK regulated futures and options on Bitcoin?
We've been regulated by the UK FCA since February of 2022. We're obviously partnered with London Clearinghouse, who have set up Digital Asset Clear, which is a completely segregated silo focused on the clearing of cash-settled digital asset index products. They are going through their regulatory upgrade process right now. I think it's quite public that we expect that regulatory approval to be by the end of Q1. We are currently in the process of testing, so we have institutions testing the platform and banks testing the platform right now. Post LCH receiving their regulatory approval, there'll be a period of intense testing, and then we expect that we're very confident of that go live being in Q2.
What is the potential for these products?
There's huge potential for futures and options as the market institutionalizes. So I think if you look at FIA statistics, they had options at 65% of total derivatives last year. The year before that, I think it was somewhere around 45%. So let's just loosely say options are 1-for-1 with futures. If you look at the structure of the digital asset market right now, you have Bitcoin and ETH futures and Perps market that's somewhere in the $50 billion of ADV versus options being $1.5 billion. We think that there's huge room for the growth of futures, but in particular the option space for digital assets. So even if volumes didn't grow from here, basically the options market has to grow 25 times to be in line with traditional finance. A market, I don't believe, is truly institutional until it has three legs to the story: spot, futures, and options. I think large institutional participants are not just buy and hold. They want to buy, they want to buy a hedge, they want to partial capital protection, so you have to sell upside calls, buy downside puts. You want a yield enhanced product, you have to sell upside calls. So options underpin a lot of the structured products, which is how typically institutions and asset managers often enter an asset class.
What is GFO-X's advantage over your competitors?
I wouldn't view them as competitors. I think that firstly, we serve a different market set. So, I always say that we set up GFO to solve for the 90% of institutions that don't trade this asset class right now, not the 10% of institutions that do. So I think if you look at, say, CBO Digital's business model, they have spot and futures on the same platform. So, a regulated basis trade. Investment banks right now can't touch the spot. We've set our business up, as I said before, to solve for the large investment banks and the large institutions. So it's marginally a different, I would say, client base at that point in time. So, maybe down the road we converge.
What risk management is in place in case Bitcoin goes parabolic?
We're a fully regulated exchange, so we have all of the protections that you would expect. We have circuit breakers, we have PTRM controls, and all of the things that large institutions want, things like self-match protection that you just don't have in these unregulated exchanges. Derivatives exchanges tend to help with volatility, not typically exacerbate volatility. So they're naturally hedges for people like the ETF issuers that obviously need to create, and obviously it's a cash creation right now, not an in-kind creation. So having tools and sophisticated tools with which you can hedge those products, I think is really important. So for us, as a derivatives exchange, I think that we help the balance and we help the controls around the ecosystem.